Have you ever seen something that just makes no sense? Well, we've got a real head-scratcher today. Imagine a huge tech company announces it did better than expected, and the market just completely freaks out. That is exactly what happened to Intel, and we are going to figure out why.
So first, just look at this number. In one single day of trading, Intel's stock absolutely plummeted by a whopping 17%.
And to really put that in perspective, this wasn't just some random bad day. Nope, this was the company's worst single-day performance in nearly a year and a half. That signals a serious loss of confidence from Wall Street.
So let's get into it and unpack what on earth happened here. How does a company go from what should have been a celebration to a total stock market disaster practically overnight? Right, this is the big question. Because if you were only looking at the headlines about how they'd been doing lately, this drop would make 0 sense. But as you've probably guessed, there's a lot more to the story.
So let's start with the part that makes this whole thing so confusing. The good news. You know, the stuff that on any other day should have sent the stock price flying high.
And here it is. Intel didn't just meet expectations for its fourth quarter results, they beat them. They made more money and had higher revenue than all the experts predicted. I mean, that's literally the definition of a positive surprise. So why did the stock crash?
Well, the answer comes down to a fundamental rule of the stock market. The market is basically a giant prediction machine. It cares a little bit about where a company has been, but it cares a whole lot more about where it's going.
And this right here really lays it all out. The past? It looked pretty good. But the future? Well, that looked bleak. So investors heard the good news about the last quarter, nodded, and then immediately asked, okay, but what's next? And they did not like the answer.
Now let's look at the actual numbers, because this is what weak guidance really means. The revenue forecast just barely hit the low end of what Wall Street was hoping for, but the real bomb was the earnings forecast, break even. The experts were expecting a profit of 5 cents a share. Forecasting 0? Whoa, that is a massive flashing red light for any investor. And then this quote from the CEO, Lip-Bu Tan, during the earnings call just sealed the deal. I mean, while it's honest, phrases like multi-year journey and it will take time are pretty much the last thing investors want to hear. It basically translates to, hey, don't expect things to get better anytime soon.
And digging in a little deeper, the companies spelled out some of the serious problems behind that weak forecast. First, they're having supply shortages, which means they literally can't make enough of their products. Second, their production efficiency isn't hitting its targets. And to top it all off, a really key part of their business just isn't performing well.
Now let's zoom out, because all of these internal problems are happening at the absolute worst possible time. They're taking place right in the middle of the biggest tech revolution in a generation, the AI boom. So while Intel is struggling to get its house in order, its competitors are just crushing it. They are cashing in big time on the huge demand for powerful chips that run data centers and AI. And that's an area where Intel is now looking like it's falling behind. And a huge piece of this puzzle is something called the foundry business. Basically, this is Intel's big bet to start manufacturing chips for other companies. It's supposed to be this massive engine for growth, putting them head-to-head with the guys who currently dominate the industry. And this chart, wow, it really says it all, doesn't it? Right now, there is a huge performance gap. Competitors are riding high on the AI wave, while Intel's super important foundry business is struggling to even catch a ripple. So, after all that bad news, what's the plan? What does the road ahead actually look like? If the CEO is talking about a multi-year journey, what are the signs investors should even be looking for?
And this timeline really puts that journey into perspective. The company's hoping to announce its first customers for their next-gen chips later this year, but analysts are warning that any real meaningful revenue from those new chips might not even show up until late 2028. That is a long time to wait.
And that brings us to the ultimate question. Intel used to be the undisputed king of the chip world, but now they're facing manufacturing delays, tough competition in AI, and a long, uncertain road ahead. The biggest question for everyone is, can the old king actually reclaim its throne?